All right, good afternoon, everybody. Well, thank you for joining us. Chris Bullock is joining me, and Don Dreck, might be on the call here as well in a little while. So we kind of blocked this meeting out for an hour. I try and keep it around 45 minutes, and obviously, if anybody wants to pop on and off at any point, let me know, or don't let me know, just go for it. Please do ask questions. You could put anything in the chat if you want, or just unmute yourself and chat. This is pretty informal. So what we're going to talk about today, the focus is kind of quick closes, kind of uh, without going into extra long detail, just the process of what happens between application and closing, but really just from a realtor standpoint and from our standpoint, what we like to do and habits and topic suggestions we like to make to try and keep the process moving. More importantly, the buyer motivated to keep going. So I'm going to do a share screen here. So as I usually start off the meeting, oops, to wait for Carrie to grant me access. There we go. Okay. So just for if you haven't, we're going. They're always updating our homepage. So check this out from time to time. This is where buyers go to make application, but there's a lot of good resources, helpful articles. If you're kind of just, looking for something to chat about, whether it's on a social post or you're going to meet somebody and kind of want to have an idea of what's happening in the marketplace, got plenty of articles, construction loans, stress-free. I mean, there's a nice little handy search bar. So, recasting has been a topic. You've no doubt heard me talk about these on the Fireside meeting before, but you can call any of us just for a quick rundown, but we've got a few articles on it right here. So anyway, just wanted to mention that. And then as I usually do, I also kind of want to touch on interest rates. So, right. To give you a feel, so I've sourced this site many times before, but Mortgage News Daily, it's a less commercial. It's not like a bankrate.com where they're just putting information out for you to click on and submit your information. So this is a little bit more of an impartial, non-advertisement kind of focused interest rate quote. And this quote is basically the national average. So again, nationwide with 0 points, assuming good, strong credit. So this is just to kind of give you the pulse of where rates are. So a 30-year fix right now sitting at 6.95%. That's with 0 points, assuming good, strong credit. We're able to do a little bit better than this for some customers with, good, strong credit, some first-time homebuyer programs, things of that sort. FHA are, as you can see, running a little bit better, under 6.5%. So FHA does have some big benefits to that, the interest rate being one of them. Just doing a quick look back, this is where we've seen the 30-year average over the past 12 months. So, we are well, here we go. Where are we? Almost exactly a year ago, 6.99, and here we are today, 6.95. So we're almost exactly the same from where we are a year ago. The low points we saw last September, that's when it looked like inflation was done with and inflation was going to be improved, and we're going to be looking at least 4 to 6 Federal Reserve Board rate cuts, but the reality set in that, nah, not so much. And then if we look back since the first of the year, do this real quick. So since the first of the year, you see still a little stagnation here, but this low point here was about a 48-hour period when we saw the tariffs first got announced, and everybody took their money out of stocks, put it into bonds. We saw a real quick bond rally. In fact, the 6.6 was just a 24-hour average. We saw rates touch almost 6%, 6.25 there. And if you look at the date on here, that's April 4th. And here, if you look April 11th, what a difference 7 days makes, going from 6.6 to 7.7, 7.07. And for a time there, they were even a little bit lower than the lows and a little bit higher than the highs. So pretty wild month, well, week, I should say. And we're kind of settling in right about where we started. So just to give you a little feel for where things are at, the inflation report came out yesterday, slightly better than expected. The Fed meeting last week was kind of nice and boring. So relatively quiet, but there's still a little bit of upward pressure on interest rates. So there's really nothing on the horizon that we're expecting to kind of, send rates, sharply higher or quickly, sharply lower. But course, it's when nothing's happening that sort of ex craziness sort of happens. So anyway, calm before a storm. I wouldn't even say that, but sorry about the Chris, are you hearing that ding here? I can't turn it off. Sorry.
It popped up,
All right.
but it's gone now.
All right, cool. Sorry about that, guys. All right, so what I'm going to chat about today is quick closes, and Chris, absolutely, please feel free to chime in along the way. So, um, I mentioned at the Tuesday meeting for those who were there, but in the past 3 weeks, this is what I would say the busy season or the start of the busy season. This is usually when pre-approvals are at their highest. We're kind of getting near the end of the school year, so people are going to start listing their houses a little bit more. But then, of course, come the summer vacations and this and that. So there's little peaks and valleys as we go through the next couple of months. But this is definitely kind of the spring rush. So waiting for more inventory to hit the market, but as it's coming out, we're seeing a lot of movement. And over the Chris, myself, Don, kind of just doing in the past 3 weeks, I think we counted 4 transactions where we had a buyer apply and then issue the clear to close. We had one in 9 days, 10 days, and two in 11 days. And I just want to go into exactly why that's nice, why it happened, how it happened, and some of that. So I'm not going to go through each deal in general, but generally speaking, when we talk to a customer, whether it's a first-time home buyer or someone's been doing this a long time, we're always trying to set the expectation. And a question that often comes up, how long does it take to close? If you look at the national average, it's somewhere around 40, when I say how long it takes to close, but from application to close, it's about 40, 45 days. We're seeing, generally most contracts are 30 days or less. Some of them are longer, especially as we get towards the summer, but generally speaking, they're looking under 30 days. As a branch, our branch in 2024, our average from contract to close was about 24 days. Now, that's an average, and that takes into consideration 60-day closes and all of that. So it's kind of a skewed number as far as how fast can you close, but just to show kind of what our average was last year. So when a buyer says, all right, well, explain me through the process. And I know I'm talking to realtors who have a pretty good understanding, but I kind of want to have you hear how we explain to buyers and give you, a little bit of a peek behind the curtain. So I tell a buyer, okay, if you're under contract on June 1st and you want to close June 30th, just to use that as a date. So if they're under contract June 1st, we hope that we're being contacted, if not June 1, June 2, June 3. Now, the buyer does have 3, 5, 7 days to make application, whatever's written on the contract. My suggestion would be to tighten that up. 3 days is probably good. 5 days, probably maybe overkill, but not a bad idea. 7 days definitely gets a little long. So if you have a 21-day close, but the buyer's going to have 7 days to shop around, that doesn't leave much time for the lender to do what they need to do. But let's say the buyer's under contract January 1st and January 2nd, they call and say, hey, Sean, good news. The house that you ran payments on, I got it. I'm under contract. Let's go. Okay, cool. We run through, update. Here's what's going on with interest rates. Here's what your mortgage payment is again. We may have already talked about it, but nonetheless, here's what your closing costs and all that are. How's this all sound? Okay, great. Let's get it going. So the buyer has the option at that point to lock in the interest rate. Most buyers do lock in. They're always looking for our 2 cents and what we might do. But generally speaking, let's say they lock in. So if they're locking on January 2nd, we have to send mortgage documents to them. If they're not coming into the office, we have to send electronic documents to be signed. Oftentimes those go out same day or next day. By law, we have to get those to the customer within 3 business days. So again, our plan is to get it out as quick as possible. The buyer retrieves those. We answer questions, walk the buyer through it, Zoom call, phone call, whatever. Once those are signed, application has now been completed and the file is going to be sent to our processing department. Now, if we don't already have W-2s, pay stubs, bank statements, this is critical that we get all the documents in this 24 or 48-hour period because the file then goes to our processing department. Our processors are the ones who verify, validate income, assets, everything else. They order the property title work, the survey, the appraisal. I'll come back to appraisal in a second. And then they do their job and then get the file to the underwriter. Now, most lenders say the application process takes about a week. The loan processing takes 2 to 4 days, and then the file goes to the underwriter, which usually takes 72 hours. So that's kind of what the norm is. How we operate, we run around up front like our hair is on fire. It's calm. We're not panicking the buyer, but it's a controlled sort of excitement to get the file to our processing department as quick as possible. Our processors average less than 24 hours from the time they get the file to when the file goes to the underwriter. We tell the customer, hey, when it goes to underwriting, figure about 3 days. Our underwriters average about 36 hours. So the file is submitted, it's out, and it's approved. So if you kind of just follow the timeline of a buyer's under contract on the first, applies on the second, let's say we get documents back on the third, there's a good chance this loan might be into underwriting by the fifth. And when it goes to underwriting, underwriter is going to come back presumably and say, hey, good news, the loan is approved, subject to the following conditions. Show me the appraisal, go get homeowners insurance. Oh, they were getting money from mom and dad. Show me a gift letter. Get me the title work and all of that. And then once those conditions are in, the file goes back to underwriting for the final review or the clear to close, where we typically say, figure about 48 hours, but oftentimes that's 24 hours or often same day. So we have a whole class on, the process of a loan, so I won't put you guys through all of that, but nonetheless, I just wanted to give you kind of a little bit of a rundown there. So the important steps I'm sorry, I'm bouncing back and forth. So we got first through the fifth, the file's into processing, goes to underwriting. We typically like to have the file in and out of underwriting no less than 2 weeks, and we really shoot for 10 days overall. We like to give the buyer, hey, if you can get us all conditions in the next 3 to 7 days, that'd be ideal. So now we're at day 17, all conditions are in. The file is going to underwriting. Underwriter comes back and issues the clear to close. We're looking at about 21 days. And again, that's without, that's just I would say, kind of the normal, hey, buyer, this is what we expect. This is how we like to move. And often things move faster than that. So this is my little guide here. And I could send this out as we go, but this is kind of 10 key things. Chris, Don, and myself kind of put this together. 10 key things realtors should focus on to expedite the mortgage process. So guiding clients to get pre-approved early with a reputable lender. Now, obviously, I'm biased, but I'd like to think CrossCountry Mortgage and the three of us are great loan officers. But hey, if you've been in this business long enough, you might know them more than just the three of us. Regardless, I don't want to say you want to control who your buyer is going with, but you do want to make sure that they understand whoever they're going with should be reputable as far as being able to deliver on the loan that they're requesting at the rate that they're quoting within the time frame, because there's lenders with great rates who can't close on time. I mean, or who have great rates or low costs and not great customer service. Or on the flip side, you have someone who has great customer service, they'll get their loan clear to close in 7 days or 2 weeks or whatever, but you're paying through the nose for it. So you want to find a balance and keep in mind, the steadiness and the ease and really the buyer's overall experience is going to fall on you. You may have heard me use the analogy before, but to a customer, I like to think of it as, the customer is is someone going to a play. They go to a play and see some famous Shakespeare, whatever, call it Hamilton, and there's 5 actors up on stage. Take it the realtor, who's the lead, loan officer, supporting role, home inspector, title company, and homeowner's insurance agent. If those 5 actors they know the script to Hamilton, they go out, they sing their song, they do all their dance, it's going to be a good show because it is a good show. But when those 5 actors have worked with each other and all know each other, there's going to be a little bit more continuity. And, I would go so far as to say that you'll get a greater and longer standing applause when the production is good and everyone gels together. That's a far-reaching analogy that I've used before, so thank you for bearing with me on that. But nonetheless, you being kind of the lead role, underwriter is probably going to be heavily influenced by what you say and, give advice, even if it's not like, go work with this lender. Even if you said, go work, make sure you're working with a lender who knows what they're doing, who has good ratings, who has good proven service, because it's not just about you, the customer, but it's also the seller as well. So when you hand in a pre-approval letter, the seller reads that pre-approval letter and the listing agent reads that pre-approval letter. Not only the pre-approval letters, for most lenders, pretty generic, but the name on there as well. If so-and-so's, seller's working with, or the listing agent more commonly doesn't have a real good vibe or a good experience working with, lender A, they may not want to see a pre-approval or may want a second pre-approval from somebody other than lender A. So anyway, making sure that your buyer is working with somebody reputable. And of course, if you're a listing agent, when you see that offer coming in, read the letter. You'd be surprised of what these letters do and don't say, and call the loan officer. It's shocking to me, um, with every realtor who's not just commission check, but reputation is on the line based on the loan process, based on I guess the smoothness or whatever you want to say, the ease of this loan process, that they don't call the listing or the loan officer and say, hey, just want to make sure you talk to these buyers, right? You actually provided, you verified income and assets, you have W-2s and pay stubs. Cool. How long is the credit good for? Ask, how long have you been in the business? How many FHA loans have you done this month or this year? The quick questions to ask just because, again, your reputation's on the line. But Chris, I'm gonna take a second to breathe. Anything you want to throw in there?
No,
No?
sounds good.
Okay. Educating clients on important and responsiveness. So again, when someone says, how long does it take to close? I say, hey, 21 days is typically pretty easy, provided the buyer is qualified and motivated. And it's shocking how many, consumers, how many buyers are one and not the other. You could have 20% down, a 780 credit score, and a debt to income ratio of 2%. But if the lender asks for a pay stub and you're 2 weeks in getting that, it's going to slow down the process. I mentioned these four closes that I kind of just was keeping score on. Of those four buyers, three of them were first-time home buyers. And the reason they move quick, one of them, doesn't fit the profile. They're, not an engineer with 20% down and great credit score. They have pretty sloppy credit, and looking at their finances, you think, oh, geez, this one's going to be tough because they haven't paid all their bills on time. They don't have all their money in the bank, but they jumped through the hoops. And part of it was out of fear. As most of us know, fear is a powerful motivator. And this particular realtor on this particular transaction saying, hey, we got to move quick because there were other offers on this property. If we fall short on what the seller is expecting, that's going to be a problem. So you need to do what your lender says. If they say, go get that bank statement on blue paper, go get it on blue paper. Don't ask why, just get it because time is of the essence. And in this market, we can't mess around. So again, some of those were first-time homebuyers who didn't know the difference, one could argue. And in addition to that, were just afraid that they were going to mess up the process and mess up their ability to close. So anyway, we tell a buyer, hey, this is important. You got to get it to us quick. But hearing that from the realtor is going to carry as much and potentially even more weight. Chris, any comments on that?
Yeah, I think it's important, like, especially in the market we're in right now, when you frame it in the sense of you love this house, we put in multiple offers, we won. This is the last thing we need to do to get this done. They'll be motivated to want to get us I mean, it seems silly sometimes people are like, why do you need the blank last page of the bank statement? We just do, because they're going to ask for it and it's going to slow us down. So sometimes when it's framed in a way, it's like, we're almost done. This is the last few steps. Just work with us quickly. We'll all get across the finish line, which is everybody's goal. So
I had one last week. They said they were getting a little extra money from mom or dad. We really didn't need it. They said, "Hey, I just got a check for $3,000. Is that okay?" I said, "Yeah, deposit it and send me a check or a copy of the check. I might not need it, but I'd rather have it and not need it than need it and not have it. So it's at the risk of putting them through one extra step that might not be necessary. It saves us time in the end, should it be necessary. So, but communication. So if there's if a deal if you go through any complaint in this world, it's usually okay, there's a problem, but then what made it worse is the communication. Just like in politics, it's not the crime, it's the cover up. In the lending world, it's not the mistake, it's the communication or lack thereof. So it's sort of when, okay, you're 10 days out from closing and oh geez, we have an issue and we might have be late. Instead of communicating 10 days before, just sort of ripping off the band-aid, they'd say, you know what? Let me wait 7 or 8 days. I might be able to save this and make it in time. Well, then, whatever problem is still there 48 hours before closing when the moving truck is in the driveway and everything else, it's a nightmare. So with you as the realtor who's essentially quarterbacking the transaction for the buyer or the seller, I would just say communicate with everybody. So for those who use Liz, especially for like solo agents, and if they're using Liz as their, closing coordinator, I love it as a lender. And if I'm a realtor, if I don't have this, if I'm not don't have a system in place for myself, I'm going to hire her every time because she will reach out on every transaction I have with her at least once a week and potentially more, just going, hey, has the buyer applied for their mortgage? Because that's part of the contract. Have they ordered their appraisal? We know that's necessary. Is there a loan commitment? Has the CD been sent? Is the appraisal back? Is the loan clear to close? Is the preliminary CD sent out? Is the closing scheduled? So there are, if you're a realtor who's not already reaching out to the lender at least once a week, make that mandatory. By the way, if you're closing in 18 days, you probably want to do it more than once a week. And if that loan officer doesn't get back to you, I don't want to say worry, but there might be a reason they're not getting back to you. They're busy, they're out of town, they're tied up, or maybe there's a problem with the loan. Maybe there's something you're not telling you. Ask about, hey, is the appraisal back? Well, no. Well, wait a second. The appraiser was out there on Monday. It's Friday. What's taking so long? Oh, nothing. The appraiser might have a reason or perfectly plausible reason for it. But you'd hate for like, oh yeah, the appraisal came in short 3 days ago. I didn't tell you because I wanted to make sure that we had a solution first. You want to know what's going on every step of the way. So communication is key. And in these days, you know, whether I like it or not, email, cell phone, text. There's a half a dozen realtors and who live within 2 miles of me. You could just drive to my front of my house and knock on the door. And by the way, with Chris, Don, and myself being inside the office, I always tell an agent, excuse me, a buyer. Hey, so one advantage is, when you're working in with in the same building as your Keller Williams realtor, I can't hide. I have my door closed right now, but I got two windows on each side, and anyone can peer in and go, "Hey, Sean, how come you haven't returned my voicemail in 24 hours?" That's not going to happen. I'm going to return everyone's voicemail right away. And the last thing I want is that awkward sort of contact. But Chris, anything to add on number three?
I think so.
Ensuring purchase agreement is clean and complete. This sounds pretty basic. I mean, in these days, most contracts are legible. Every now and then you get that one that was printed and faxed somehow, or it was just a bad copy, or it was a photo printed and then signed or something. But so as far as clear contracts, as far as being able to read them, that's not as much of a problem as it's in the past. But the wording in there sometimes a little wonky. And the buyer's comp agreement mandatory. We are not allowed to send a buyer documents without the buyer's comp agreement signed and in hand. Because when we send the buyer, hey, here's a breakdown of your closing costs, we have to disclose the commission on there. If we don't disclose that, it's a major compliance issue. So we need that along with all other addendums, disclosures. So what every lender looks at is a lot of realtors think, hey, you just need the contract, right? No, no, no. I need the lead-based paint. I need the residential property disclosure. I need the buyer's comp agreement. If the contract mentions addendum A, I need addendum A, whatever that is. The little box that says ABA or home warranty, we need that. If there's a box checked on there, that other document becomes part of the contract and we're required to have that. We could often, with the contract and the buyer's comp agreement, we could at least initially disclose the loan, but we cannot clear to close a loan without the lead-based paint, the property disclosure, a silly ABA. So just to be clear on that. Does anybody have any questions?
It's worth noting, signed by both parties too. We'll get a lot of contracts that are only signed by the buyer, which perfectly fine. We can start the process, but the underwriter is definitely going to ask for seller SIGs on all of those documents.
Well said. And that's where, again, if you have your own coordinator, I don't need to bug you for something. I'll go to the coordinator if that's easier for everybody. Coordinating access for appraisals and inspections. This one is probably more on the listing side, but if you've got a buyer, let's say we're doing a 21-day close and the buyer applies right away, but comes time for us to order an appraisal if necessary, and the buyer says, well, I don't order my appraisal until my home inspection's done. When's that going to be? Next Saturday. And it's like, okay, well, we can do the loan process, but now if you're saying can't order the appraisal for a week, that's going to, somewhere in the timeline, that's going to get thrown off. We can rush appraisals. It's extra $150. We're willing to do it. Of course, the buyer has to pay for it, but prefer to do it only when necessary. So we like to order the appraisal as quick as possible. We do collect the payment, and as do most places, collect the cost of the appraisal upfront. Now, there are some times where we don't need an appraisal. There's a waiver. We've talked about those in some other firesides, and we can address that later if anyone's curious. But just so you know where we stand on that. So again, you set the expectation. Okay, buyer, here's the next thing. You're under contract. You have to go apply for a loan and pay for an appraisal. If you want to say, okay, we'll tell the lender we'll order the appraisal after the inspection. Perfectly fine. I'm okay with that. But go get the inspection scheduled right away. If the lender's not your first call, the home inspector should be. Anything you want to add there, Chris?
Yeah, I like to set the precedent, you know, obviously with me, Sean, Don, open communication. I mean, most of the calls I make on a Sunday are to listing agents for my buyers so that I'm letting them know their pre-approval is strong and they're good buyers. Also communicating there that, hey, this is going to be a 10-day close, or this is going to be a 2-week close, or we're trying to close as soon as possible because we're trying to beat out cash offers. It When I get that, I usually go, we'll absolutely do our best. It's possible as long as we're all on the same page. My very next call is to the buyer to say, hey, sounds like we're going to win this because we need to close quick. If we do that, here's how much a rush on our appraisal is going to cost, and I can get it by the end of the week. I think that would be worth it. I think that puts us in the best position. When we frame it like that, usually they go, if it means I get the house, then all right, let's go for it. And when you order those rushes, I mean, usually what it is it gets kicked to the top of the queue of whichever appraiser is assigned to it. So it's kind of like next on their docket. And I mean, I did one 2 weeks ago and we got it in like 3 days. It was super fast. So.
Mhm. Well said. And we've talked about this in the Tuesday meetings and other fireside too. But don't forget about that fast track. So that loan underwriting I mentioned, buyer's under contract, applies for the mortgage processing, and it goes to underwriting. That processing and underwriting we could do before they find a house with our fast track, and it's no cost. It helps us to sell your buyer to the seller if we're making one of those Sunday afternoon calls. Hey, not only is this buyer pre-approved, they've been through our fast track underwriting process. This loan's already, has issued loan commitment. All we need is a house, contract, appraisal, homeowner's insurance, and title work, and we can close this thing as quick as can be. So contingency deadline. So this one is more kind of just to hit you square between the eyes. It shocks me how few phone calls I get from listing agents going, hey, buyer was supposed to apply last Monday. Did they apply? Yes. Okay, cool. I don't get as many calls as you might expect there. The other one, hey, loan commitment was supposed to be issued on May 12th. I never heard from you. Well, we're not allowed to send a loan commitment out to anybody to the buyer. Feel free to call me and I can update everybody as needed as well. But if I'm a listing agent or a buyer's agent, I'm calling the lender again weekly, but that date's going to be circled on my calendar to say, hey, are you pre-approved, or excuse me, has your lender let me call the lender and ask them if they've issued loan commitment. So, troubleshooting potential issues proactively. So, going through the loan process, anything can pop up. I mean, obviously buyer related stuff, but from a realtor standpoint, more like, oh, the seller's going to be out of town, or what, the inspector was there and there was water in the basement. The appraiser's coming in a couple of hours. Let me, pause that appraisal for a bit just to find out what's going on there. Or, oh, I just found out the seller's going through a divorce, or maybe there's, there can be countless things that pop up along the way. So just call everybody. I mean, I get calls from some of my most supportive agents and all saying, "Hey, just want to give you a heads up. Title company just let us know this is going on. Are you aware?" Okay, good, perfect. Are you not? Great. Here's what's going on, and if we need to worry. So, I just had one where the closing buyer signed his closing papers at 7 in the morning. It was gonna, or 8 in the morning. It was gonna file the next morning, and I got an email at 5 o'clock just saying, "Hey, those documents are signed. Put everything on hold." Went through the walkthrough, and there was a puddle in the basement. So we paused everything. Buyer had already signed, wired his money, and we were supposed to have transferred in about 18 hours. But that call came in. ended up getting taken care of and everything closed. It was as more or less a moot point and a non-issue once all was said and done. But obviously, you can imagine the panic that was going in there. But just, making sure everybody is on the same page, going back to communication and just staying ahead of it. Keeping the seller informed and managing expectations. So I've been doing this for a long time, over 20 years, and when I started building a business, I'll give you one example. There was a guy, a couple agents who I started working with, and wasn't really like chasing them for business, but I kind of blindly asked him. I said, "Hey, listen, I enjoy working with you. I'm a young guy, kind of early in the business. Just if you don't mind me asking, you know, why are we working together, but why do you like working with me?" I remember the first guy, he said, "Well, when I call, you answer the phone." I was like, "Yeah." He goes, "Yeah." I said, "And if you don't, I leave a message and you call me back." I was like, "Okay." Yeah. He goes, "Not everybody does that." I said, "Oh, okay." So the bar is pretty low in our industry, collectively in real estate. Um, Calling people back, texting back in this day and age, emailing back, doing what they're done. That's often some of what it takes just to get, kind of build a reputation. The um, second call was, wait, I forgot where I was going with that one. So, oh hell, we'll come back to it. I forgot what the little lesson was there. I've told the story again and again. I can't remember what that one was, but oh, I know what this one was. I apologize. Was working with a buyer who happened to be a listing agent on a transaction months before, and it was a little rocky. So it kind of the stars aligned where this realtor, I kind of, was on their radar because we had a tough deal close, and I didn't go out chasing them for business, but several months later, I had a random buyer who also bumped into them, and here we met up again. So I got to wow this agent both on both sides. So because I communicated so well on the first time around to a listing agent who really I don't have an invested relationship with, at least at that point. And then we're back on the radar not too long later, and we worked for years and years after that until she retired. So anyway, that was the second part of my story. Managing expectations. So again, what a buyer sees, coming from you, whether it's general information, a timeline, or frankly, panic. I mean, I could tell you several stories of we'll give an example of an appraisal coming in short. Someone's buying a house for 200, they're borrowing 190, and the appraisal comes in at 195. I usually call the agent first and say, "Hey, listen, here's what's going on. I'm going to tell the buyer, but just wanted to give you a heads up because as soon as I tell that buyer, they're probably going to call you." And if that agent just has the woe is me, I can't believe this is happening, that appraiser's an idiot, this is never going to get worked out, you know what's going to happen? It's not going to get worked out because the buyer is going to hear from their realtor and see panic in their eyes and ears and mouth and just go, "Okay, well, this sounds like a big problem." Whereas, the next agent might handle it and say, "Hey, you know what? We have a short appraisal. We talked about this. This is not uncommon, especially in today's market. Here are the ways to move forward. Here's, the options you have as a buyer contractually. Here's what your obligations are or aren't. Let's talk about those and options on moving forward. Or if you didn't want to move forward, how that works as well." So really, the buyer is going to follow your lead if you're the trusted advisor as the realtor. So keep that in mind and, keep that. That's also part of setting the expectations. But Chris, anything on that?
No, well said.
All right, if there's any questions out there, feel free to jump in. We got two more. Attending the closing and ensuring all documents are signed correctly. So back in the day, the title company that I did most of the business with was in the same building. So it was great because most buyers came in. I got to pop in, kind of shake hands, and it was a nice way to kind of close things, answer questions. I barely get to do that these days because everything's remote. It's at weird hours. It's people's houses, people's work, a random Panera in the middle of the day. So I don't get to do that much. You as a realtor often are a bit more in the mix and often on the road. So I definitely would encourage that. And being there for questions. I mean, before most of my buyers are signing, I kind of remind them, "Hey, here's how the closing process works. You're going to see some documents electronically, some face to face. As you're reviewing the electronic ones ahead of time, that's a great time to review and ask questions. Even if you're at the signing table, if the notary can answer a question for you, call me on the spot." Um, And then the last one, building strong relationships with lenders. I mean, obviously we're a lender. We, our business runs on relationships, not just, kind of in the upfront point of sale, but longevity, reputation, and everything else. So, knowing people in this business is huge. Like I said, if you're a listing agent, call that loan officer just so you know what they do, who they are, if they know what they're talking about. If they don't, whatever. Just like, the Tuesday brokers opens, thankfully, are coming back. And the part that's nice about that, I think, taking myself out of it, is realtors get to see each other. And the first time, Tom, the buying agent, and Susie, the listing agent, the first time they're talking might be during negotiations. But hey, if they bumped into each other at a brokers open or a networking event or a Elgar or it's not KBOR or whatever, I forget what the acronyms are. But anyway, these relationships help. I had a transaction close or get accepted where my buyer was one of multiple. I think it was 4 or 5 other offers, but I called the realtor who I happened to know and worked with before. Just said, hey, nice things. This buyer's great. I have all their documents in hand. They're fully pre-approved. No, it's not a cash offer, but it's the next best thing. Found out about 48 hours, the offer was accepted, and the realtor specifically mentioned something to the effect of, Sean was part of the reason why we accepted it. It was not the highest and best offer, but his call and knowing who he is and he's going to get the job done gave us peace of mind. So that listing agent was able to sell that. I'm no hero. I put my pants on one leg at a time, just like everybody else, Chris. But when we do, we tend to close loans on time and at a great competitive interest rate. So anyway, these things can make a difference. So not just with the lender, but other realtors and title companies and everyone else. So that is something I probably took for granted when I got into this business. But knowing people and this is a stressful business. I mean, for us as salespeople, meaning lenders, realtors, and then even the lending side. I mean, you want to see stress, go check out a title company the last couple of days of the month. And for a buyer, of course, this is one of the most stressful things. I used to say the most stressful things: getting married, having a kid, buying a house, and getting a divorce. And you have some of those people doing 3 of those in the same summer. Hopefully not the 4th one, but the divorce one. But nonetheless, you're kind of their, I don't know, their shepherd, their Sherpa. I remember one of our sales guys used to say, guiding them through the process. So just, being familiar with everybody who's part of the transaction is going to make you more comfortable, you more confident, and overall make your clients, all the better. So that's my take on it.
All good stuff. Can I chime in and ask a few questions, guys?
Absolutely, please.
Fantastic. Well, yeah, I just to piggyback off of what you just said, it's huge to be able to like leverage your partners. You know, I've done this many deals with cross country. I've done this with these title companies. You know what I mean? Just that familiarity, in my opinion, just adds more value. But just to ask a few questions, I have a couple investor clients, one in particular. They just are trying to find a product that's not 20% down.
Mhm.
Do you guys do anything in like the 10 or even lower 5%?
So for straight up non-owner occupied, so Fannie Mae and Freddie Mac, if it's a single family home, the minimum is 15% down. You do pay a higher interest rate. You're probably going to pay a little bit in points, and of course, you're going to pay some amount in PMI. So single family can be 15% down. So I'm talking just traditional Fannie Mae, Freddie Mac for the moment. If it's a duplex, 2, 3, or 4 unit, the default is 25% down. Now, obviously, if someone's going to occupy it, that's a little bit different. And then we do have portfolio programs. So we do have a portfolio program, and correct me if I'm wrong here, Chris, that will do a multifamily, I think down to 20%. But as of right now, I mean, the days of the 5 and 10% down investment property, they've been, from a traditional sense, they've been gone for about 15, 17 years. So anything in the traditional world is going to be that 15 and 25 portfolio, 20 on the multi and maybe still 15 on the single, but not traditionally, you're not going to see anything under there. I mean, hard money stuff, but that's not anything we get into.
Right. What about do you got even like any other creative ways besides like having a balloon payment or having, high monthly payments and nothing? It's just has to be 20% on multi-payments.
20 to 25, I think. Yeah, I go back and double check our portfolio, but there's to my knowledge, I mean, and we to be clear too, we do Fannie Mae, Freddie Mac is, 90% of the non-government loans are done. So that's what it's I call the inside the box. And then we also do portfolio loans, which are the outside the box, which, 80% of the lenders don't do. And those get to the fringe. That's where you have your DSCR loans, your bank statement loans, your cash flow business type loans. So that is what that gets outside the box, and that's probably the furthest we go. So I'll double check some of the down payment requirements, but I think 20, 15, and 20 is going to be the norm on that.
And
Chris,
that's even on the portfolio. Like even if we bought 10 houses, it's
yeah,
still going to be that
yeah,
percent. Okay.
yeah.
Um, can you tell me a little bit more about DSCR? I understand that it's all, your credit and your income that's getting generated. What am I missing about that?
Yeah, so DSCR, so just to do it in a nutshell, you've got, and I'm going to pop this up just I want to talk about this too, but I'm popping that up before anybody jumps off. Actually, this is the perfect event. So, Justin, this event, June 3rd, is being put on by the head of our portfolio lending department. And this is specifically on, some call it non-QM, I call it portfolio. So the DSCR will be featured along with a bunch of others at this event. So you're invited to this. But in a nutshell, how the DSCR works is, let's say you've got a $200,000 duplex in Cleveland Heights. We say, okay, you got to come up with 20 or 25% down. So let's say it's 25% down, and you've got a $150,000 mortgage. We're looking at the mortgage payment on that, principal, interest, taxes, and insurance. Let's say that's $1,600. We want to show that it's cash flowing, ideally 125%, but even if it's a 1-to-1 ratio, so if it's $1,500 or $1,600 payment, and the proposed rental income is $2,000, that's a 1.25 ratio. You're
Yeah.
going to get, pretty good interest rate on that. I mean, to throw a rate out there, a 30-year fix, 0 points. If you did the no prepayment penalty option, you're probably going to be 7, 8, somewhere in that range. If you're okay taking a prepayment penalty, that'll bring it down more in the mid sevens, which, compared to 6.95 for a primary residence isn't all that bad, especially when we're not asking the question, where do you work? Or frankly, not even asking, do you have a job? We're just running it off of the cash flow of the property all by itself.
So if I have 20% down and I have an income generating 125%, that's the only thing I need to be able to get in a DSCR loan?
Yeah. I mean, there's a bit more. We're going to look at the credit score. We're going to look at,
Credit.
the funds do have to be your own funds. They can't come as an outside source. You do need a little bit extra reserve. So, if you need 50 to get in, you need more than 50 in your bank account. We're going to have to see, I think, 6 months of cash reserves, meaning 6 months of the monthly payment added on there. You cannot be a first-time home buyer for this program. You have to own other property, ideally a primary residence. So they're not going to let, first-time home buyer buy a DSCR loan product purchase as the first property.
Gotcha. Okay.
You
Even if they live in it.
No, if they live in it, it's different. So the DSCR, you can't move in. If you do a DSCR and you move into it, you now have to pay the loan off day one.
Oh, I see.
So if you move into the property, that's totally different. So if you're buying a duplex and you're moving into it, can't do DSCR. You're looking at Fannie Mae, Freddie Mac, FHA, but now you're talking 3.5 to 5% down.
Understood. And then what about what you said earlier? There was a situation where the appraisal could be waived.
So if for a conventional single family or condo primary residence, when we start the application, the buyer's information gets rerun through our automated underwriting system with the property address. And Fannie Mae and Freddie Mac have, their black box of data, and they have their own risk tolerance based on the consumer, the buyer's, risk. risk from an investing standpoint. And then they have the property and neighborhood data for this particular home. And if it's below whatever, some sort of rating on their side, they'll just give us a little button that pops up and it says appraisal PIW, property inspection waiver, meaning no appraisal is required. So now we're not requiring one. If the buyer wants to do one, that's fine, but we're not requiring it.
Understood.
Yeah.
And then I've heard both sides of this. How do you guys feel about agents attending appraisals and or giving comps to appraisers?
So I encourage listing agents to go there. Because if it comes in short or you have an FHA and they says then the agent says, "Hey, there's a hand roll down there. What do what's this appraiser note?" It's like, I don't know. What did the appraiser tell you when you were standing next to him at the inspection? Oh, I wasn't there. It's like, okay, well, I know how we could have fixed that. So I absolutely say every listing agent, I don't want to go so far as to say they're doing a disservice by not being there, but they absolutely should be there. Now, if you walk in with a list of comps that the appraiser's not supposed to take them. Of course, there's general conversation. Maybe it does or doesn't come up. I don't know.
Uh-huh.
But generally, comps are not provided. So where comps do come in is if an appraisal comes in short and the buyer wants to, do a rebuttal, we can add comparables there to say, hey, why didn't the appraiser consider A, B, C? Now, more often than not, the appraiser doesn't come back and say, oh yeah, that's a good idea. I didn't see those. Usually they say, well, the reason I didn't use that is this, this, and this. Sometimes I'd say, 1 in 6 times, the appraiser says, you know what? Thinking it over, I will do that. I'll use the 4 comps or the 2 comps I did, and I'll add this one to it, and that might
Right.
shake up the number. So it does happen, not frequently, but we're happy to do that, or willing to do that. I should.
Gotcha. Cool. Does the appraiser know the purchase price that was agreed upon?
Yeah, the appraiser, it's required. We can't order the report. We can't send the order to the appraiser without the contract in hand. So they have the contract in hand. One argument is, oh, they shouldn't do that. They should just do it blind. Well, I would tell you that would be an absolute mess, first off. But aside from that, the counter argument is they need to know what's all in this. Are there closing costs being paid? Are there chattel items being included? So there's a bit more, variance in there. So, but short answer is yes, the contract is provided to the appraiser. So sometimes I'll say, hey, the appraiser oftentimes will work as hard as they have to show that value is legitimate. Obviously, if it's a stretch, they may have to work a little harder or see if they can find some other comps, and obviously doesn't always work out. But yeah.
Gotcha. Okay. All good stuff. All
Cool.
good information.
No, good questions, and I appreciate you joining us. What I have up on the screen here, so for those of you who haven't been down to our corporate office, it's a beautiful building down on Superior and between 21st and 22nd, I think it is. I could drive there. I just can't remember. Block it on. Nonetheless, beautiful area. We have an atrium. We'll be teaching a great class. I'd say more of the class, more of a presentation, but it's specifically on this portfolio program, which isn't just DSCR loans, bank statement loan, 1099 loan. What's the other popular one? We have a program where we'll ignore the house payment on the home they're vacating. So if you got someone who needs to buy and sell, but they can't qualify under a normal program with both payments, we'll delete one. They'll still have the payment, but we'll ignore it for qualifying. So there's a lot to this. There's going to be, I think, breakfast here or something. I don't know what's at 10 o'clock. There's going to be food and a nice presentation. Parking's always a little tricky. So if you're going down, carpooling would be nice. Otherwise, we'll just have to kind of work with what we got down there. But I'm going to post this on the KW webpage, KW agent site, and there'll be a link to sign up there as well.
Well,
Any
thank you
questions?
guys. No, I don't think so. Thank you guys so much for hosting this, and who knows, maybe I'll see you at the downtown.
That'd be cool.
All right. Take
All right.
care, guys.
Thanks,
Thanks.
Justin. Thanks,
All
everyone.
right.
Chris, anything you want to throw out there? You good?
I think I'm good.
All right.
See you, Chris. Thanks, guys.
Thanks, everyone.
Thanks.
All right.
Bye.